Hi guys, this is Martin from LiveMarkets.live. This is just another update, a second update for the day on the dollar index. As you see, the dollar index has just fallen a little bit more today from 94.6 to 94.8. It decided to take over the stop here. If you just follow my cursor here at 94.42, which is the 200 moving average on the hourly, it's a flat line, and that just shows there's very little trend on the hourly panel. But given the holiday season, low volumes, dealers decided to take the index down a little bit lower to 94.1. This should not make any difference in what we're expecting in dollar index to go higher, but it does make a difference for small time retail traders who have stops just about 10-15 pips. Market just cleans them out before it goes higher. So what's happening here is just this reversal on Friday weekend, and then there's been a little bit of mild follow through yesterday and today, and nothing really much. Very low. If you look at the CME data, I can show you. Let me see. Yes. So if you look at the, let me just check. This is it. If you look yesterday's volume on the Globex, which is where the futures trading is done, we look at this is yen. Just coming up on the screen. So this is yen, and yesterday was July 16th, and you saw that the volumes have been very, very low, at 340 and 350,000 contracts, nothing much. We'll just take a look at the euro, which is the one that we are really trading. We'll see that the volumes have been very low. So even with euro USD just touching a few pips up and down between 1.1730, it's not something that should bother us as such. The model's very clearly short. It's got its target at 1.1660, 1650, which I don't think is a problem at all. We should easily get that. But this is yesterday's volume. You can see it was 151,000 contracts, and on July 13th it was 200,000. But generally the volumes have been low because of summer in Europe, and traders have been taking it easy because of the World Cup. But we expect the volumes to start picking up from today, because today's Powell's testimony, World Cup's over, traders are back on their seat. So we should see some extra volume, and today will define the dollar's trend back up again. But before it goes higher, it is trying to wipe up a few stops, and you can see that there is very little follow through from Friday's move. This is where it ended on Friday, and then yesterday it went up and again a little bit lower, but there's been very little follow through of this move. So that just shows us, and couple this with the low volumes on the futures index, just tells us that there's very little interest to take this down. The more expected move here is for the dollar index to go higher, at least to this neckline at 94.7. There's a chart that I would like you to take a look at. It's the US 2-year yield. Now those of you who have the Euro USD short positions can see that every day there is free swap money that's getting added to the account. Now that's great news. I mean, just holding it there. I know the drawdown is just between about 25%. But it's just coming at a cost. It's a plus money that is getting added, free money that's getting added to the account every day that we hold it. Now you can see why that's happening. It's because of this. This is a US 2-year yield at 2.6%. This is the hourly panel. Let me just put it on the daily, and you can see the length of this move. Now this is it last year. It was 1.33%. Today it's at 2.6%. Now this is the money. This is the yield, the risk-free money that the US government is ready to pay if you're ready to invest in US short-term securities, which is basically the demand for the dollar. It hasn't translated to a dollar rally. This is what has been perplexing many people. The dollar index at the same time was around 91.68 last year. It's just about 94.4. It should technically have been about 103, which is a level that many people are expecting this year for the dollar index. Many traders and many funds are expecting that level to hit. What's been stopping the dollar? Well, for one, it's the presidency. Trump's presidency has been mired in all kinds of chaos, and his apparent closeness to Vladimir Putin, going against the General Convention, and also calling the European Union their foes and imposing tariffs on Canada, China, European Union. Those are things that that's been keeping the dollar a little subdued here. But I think those things, they will get priced in. They are priced in, and I think that markets will finally start to realize there is just really flowing money to be had through these short-term yield, and money will slowly flow into the. And it's already started to flow. I mean, back in April it was at 88, and there's been a fast move to 95. Since then, there's been a little bit of consolidation, but this, to the naked eye and just to any chartist, will tell you that this is just purely very bullish. It's just consolidated here. This is a neckline. It's just broken this neckline once, but then it just reverts back up again. Retracements are shallow. It's holding this uptrend line, and therefore they expect 103 coming this year, or at least 98. 98, because if you measure the move from here 88 to 94, that's nearly a huge 7.6 point pip, and from 94 to 100 would be another 6. So the length of this should be the length of the broken. This is going to be a broken head and shoulders basically. So that's what 98 to 100 is what the general chartist measure will tell you on what the target of this should be. Again, as I said, we could expect this to move down if the yield wasn't so high at 2.6%. I have never seen the dollar index fall when the yield continuously is rising, and also that Donald Trump has suggested that trillions of dollars are coming back to the US, and surely it will, because of the high yield that they are ready to offer. This is just a midday update on the dollar index. In just about an hour's time, we'll have the GBP data coming in. So we'll be watching, and we'll be updating you any new updates on the dollar index. So this is a chart. This is the real logic behind the trades. We'll be back later today. Thank you very much for tuning in.